Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, November 28th. Stocks on Wall Street are off to a flying start as investors return from the long Thanksgiving weekend. All three major indexes are jumping about 3%, and the Dow Industrials are now right around the break-even mark for the year. Today's rally is mainly due to some encouraging news on consumer spending. According to ShopperTrak, sales on Black Friday, the day after Thanksgiving, were 7% higher than last year's levels. The Associated Press estimates that the tally for the busiest shopping day of the year came to $11.4 billion. Meanwhile, IBM, which tracks 500 top web retailers, said online sales jumped more than 24%. And one of the big reasons for that increase was the success of Amazon.com. It reported that sales of its Kindle electronic book reader quadrupled from a year earlier.
Investor sentiment on Wall Street and around the world is also getting a boost from reports of progress on the sovereign debt crisis. Several news outlets say that when European finance ministers meet tomorrow, they'll set new rules for borrowing against the region's bailout fund, the European Financial Stability Facility. Reuters reported that they also agreed on new guidelines for intervening in the Eurozone bond markets and providing credit lines to governments. A separate report said that French and German officials are discussing deeper financial integration among member nations. Making that change could require tougher budget rules for countries that use the euro currency. Meanwhile, the International Monetary Fund denied a report in an Italian newspaper that it would offer up to 600 billion euros in aid to the struggling nation. The yield on Italy's benchmark government bond has been hovering around 7% on concerns that the country will not be able to meet its debt obligations.
Tomorrow, Italy's debt will come under even greater scrutiny when it attempts another government bond sale. France and Spain will also hold sales later in the week, but Belgium kicked things off this morning with a successful bond offering. Belgium sold 2 billion euros worth of long-term debt, but the bids it received were almost triple that amount. The sale was the first test of the bond market since Standard & Poor's downgraded Belgium's sovereign debt rating on Friday. Following that sale and the reports of progress on the European debt crisis, the region's shared currency is rebounding from some recent losses. Right now, the euro is back up near the 134 mark against the US dollar. The dollar's relative weakness, along with a heightened appetite for risk among investors, is helping commodities this morning. Crude oil is jumping nearly 3%, closing in on $100 a barrel, and gold is now trading at around $1,720 an ounce.
Looking inside the rally in equities, we see that the biggest gains are coming from the financial and technology sectors. Morgan Stanley is leading the way with an advance of nearly 7%. Citigroup is jumping more than 6%, while Bank of America, Wells Fargo, JP Morgan Chase, and Regions Financial are all up nearly 5%. Meanwhile, Google is gaining 3% following an upgrade from Citigroup. Analysts there placed a buy rating on the stock, saying the recent market pullback and internal improvements make it more attractive. Other tech stocks are rallying around Google, including a 2% gain by Apple. And finally, keep an eye on shares of commercial metals. They're surging more than 20% on reports that activist investor Carl Icahn is making a play for the company. Icahn Enterprises reportedly bid $15 a share for commercial metals, which would represent a 30% premium over the stock's closing price on Friday. That's the latest from Weiss Research. Have a great trading day.